Welcome everyone. Today we've got Dr. Sipke Shaughnessy, who is a geographer and anthropologist who has worked as a strategic advisor on political, social and environmental risk to businesses operating in frontier and emerging markets. He completed his PhD in 2019, which focused on the nomadic pastoralist economies in northern Kenya. Sipke, how does one get into investing into frontier markets? First of all, what even are frontier markets?
Both very good questions. Perhaps let's start with what they are. Frontier markets is actually quite a technical term. First, I think coined by the International Finance Corporation in the 90s, to essentially describe economies where equity markets were nascent and perhaps difficult to break into. I think a lot of us, when we think of frontier markets, we have in mind, frontier zones, sort of geographies like Chad. But actually, frontier markets exist as close to home as Cyprus and Slovakia. And Slovenia, I think, are on the list. It depends really on which ratings agency you look at.
I'm very curious to see how it's possible for Slovakia, Slovenia, and Chad to be on the same list in terms of development. But but we can dive into that later. Why don't you tell us a little bit first about your background and how you got into this line of work?
Sure. In terms of my own background, did a degree in anthropology and later a master's in African studies, which is a sort of interdisciplinary degree that gives you a sort of overview of the history and socioeconomic dynamics of different parts of the African continent, as well as language training. And that was the key thing for me was to be able to learn Swahili. Because I was just sort of, 21 years old and it sounded cool. There wasn't really a grand design behind my entry into sort of frontier markets investing. When you have a background like that, I guess it's quite easy to fall into that space. After university and after my PhD, which is probably quite a crucial component to this that I haven't really discussed, where I did fieldwork in Kenya and research on pastoralist sort of economic dynamics. I fell into a job where I was advising primarily extractive companies, chiefly mining, on managing their sort of social and political risk, both mine sites, but also in their engagements with governments and communities adjacent to their sort of project sites. That was because I was stuck for a job and this was the first thing that came across my desk. But essentially, I think the consulting firm that I worked for, we're looking for someone with experience in the kinds of markets that mining companies find perhaps more difficult to operate in, where regulatory frameworks are quite weak and where they have to rely on their own know-how to act responsibly within their markets, but also not fall foul of what can often be quite unstable political regimes, where there's a lot of political interference in the economy and also quite volatile community relations. Mm-hmm. I think we can probably point to a reliance on, the resource sector as being a common characteristic of a lot of frontier markets. That's how I got into it. It was sort of advising mining companies. The fact that what we consider to be, let's say, frontier markets, I'm speaking about the general use of the term rather than its technical definition, but also, I guess, sort of more marginal economies on the periphery of a global system are integral to us being able to access some of the material resources that we need to build industrial societies and high-tech industries like, electric vehicles.
I want to touch upon your work in Kenya. I happen to know a little bit about your research in Kenya, partly because I proofread it, but I was hoping that you would share some anecdotes and some stories about what it actually was like being in rural Kenya and doing your research there. I'm sure you've got quite a lot of very interesting anecdotes on that.
Yeah, so I was in a part of Kenya called Laikipia in the north of that county between 2016 and 2018. Northern Laikipia it's quite a unique part of not just Kenya, but Africa, in the sense that it used to form what was the White Highlands during the colonial period. So a lot of the land was claimed by European settlers in around the 1920s. Part of the reason why they were able to do that was because there had been a major rinderpest outbreak about a decade before, as well as a series of kind of internecine wars between different Maasai groups that had previously inhabited the area, which made it seem a lot emptier than it really was. Often spaces that are inhabited by nomadic economies can appear quite unused anyway because people move around with their herds. But in this case, it was particularly sparsely populated for a temporary period. On top of that, there was a kind of move by the colonial government in Kenya at the time to essentially put nomads into different reserves. And so this part of Kenya, Laikipia, became, let's say, about 30% reserved for what were considered to be hunter-gatherer people, but were actually cattle herders with no cattle because of the rinderpest outbreaks I mentioned. And about 70% sort of set aside for white settlement. Why it's unique today is because it still has a quite substantial European sort of settler population in terms of land ownership. I think people of European descent account for about 70% of land owning is in that part of Kenya, and they chiefly run private conservancies. So there's this constant sort of, I guess, public debate about whether it's appropriate that people of European descent should be allowed to set so much land aside for essentially wildlife, while the people who are perhaps indigenous to the region go through various droughts in which their livestock die in large numbers and where people go hungry. And when I arrived there, it was during such a period. There was quite a major drought in 2017, and it was also an election year, so the drought became politicized. There was a big push by, I suppose, populist politicians in the area to intimidate not only the European community in the area, but also other ethnic groups that were perceived to not belong there, or not have entitlement to the land through violence. So there were a series of kind of raids, cattle raids, essentially by pastoralists from the north of Kenya into the region, where dozens of people died and people fled their villages in precisely the area where I was going to do my fieldwork.
Now you're working and assessing this from London, from a more academic sort of investor's perspective. So let's step back in there and unpack it. What are frontier markets and why do they matter?
When you really look at the technical definition of what a frontier market is, there isn't really an obvious frontier per se. I think maybe what the people who coined that term were originally getting at was the fact that in the early 90s, economies were beginning to open up following the end of the Cold War and following also IMF structural adjustment programs in various parts of the developing world. And so I think the frontier was conceived as that boundary between a post-socialist world and the growing neoliberal consensus of the early 90s. But I think they're thinking about, I suppose, the market economy. And if we keep it as broad as that, rather than just looking strictly at equity investments, as having a frontier is quite a common way, I think, to conceptualize it, to imagine it as something that occupies space, when it really isn't. When you think about it, and it can be conceptualized in other ways. There's quite an interesting paper written by two people called James Ferguson and Akhil Gupta, where they discuss this, about how we typically conceive of states as having a top-down structure and of markets as having a flat kind of geographical presence. But you can think about these things the other way around too, right? Markets produce hierarchies. One outcome of neoliberal economics, particularly in the West, has been a widening gap between rich and poor. Increasingly, that seems to be translating into a style of politics whereby billionaires are entering government and perhaps cannibalizing it over the next 5 years. We'll see what happens in the States and increasingly here as well. But equally, if we look at the sort of spatial dynamics of the state, I mean, I think, Boaz, you're probably familiar with some of the work of James Scott, which looks at how historically there have always been limits to the reach of the state, perhaps until recently, due to geographical features or a kind of inherent community dynamics that prevent kind of state penetration. So there's different ways of conceptualizing what the frontier looks like, and I think this probably applies to, the use of the term the margins in your own podcast. Where are the margins? Where are the frontiers? Are we looking at the kind of outer boundaries of the market conceptualized as a thing that's spreading geographically, or are we looking at the bottom of a pile, the bottom of a hierarchy? So where I've kind of situated my research in that line of questioning is that within pastoralist economies, you have this quite interesting, I guess, straddling between market economies and a more traditional, so I guess, traditional form of economic activity, right? Pastoralist economies are characterized primarily by livestock ownership. These are all cattle herding people who move nomadically because it's a way to prevent overgrazing in a local area. But what I think is quite common across all pastoralist communities, and bear in mind, I can't remember the exact details, but I think I'm talking about up to 250 million people on the continent of Africa alone. Pastoralism contributes, I think, 90% of the meat that gets consumed in places like Nigeria. So these are not just, I guess, peripheral communities that sit outside of the system in some way. They're actually in many ways quite essential to capitalist economies functioning in various parts of Africa. But when we look at what happens intrinsically to them, you see, I guess, economic dynamics that do sit outside of the market economy, right? You have different forms of exchange, for example, whereby people are able to access livestock if they ever lose any or accumulate more. In the case of the community where I did my own fieldwork, by simply demanding it from someone, which is a system called paran. It's essentially a form of begging in which the person who's being propositioned can't turn down the request, because that would lead to a kind of social stigma and potentially a curse. There's another mechanism called osotwa, which is essentially, it means umbilical cord in Ma, where you essentially form a bond with someone. It can be achieved through various ways. You're automatically given an osotwa relationship with someone if you're their best man at a wedding, for example. But when you build up osotwa relationships, you again establish these links where somebody can't deny you a request if you're able to meet it. And then there's other mechanisms as well, right? Whenever somebody in your family gets married to someone else, particularly if they're a woman, you have the right to demand animals from the groom. And cumulatively, what this means is that if you belong to one of these communities, you have a kind of network of potential exchanges that gives you access to capital. It's a kind of pooled form of capital that exists across a community rather than individually. But it serves, and this is something that I at least observed in the course of my own fieldwork, and it gets discussed by people as well. It serves as a kind of impediment to proletarianization. You have communities who do not feel compelled to engage in labor, which I think is, to me, it's a kind of defining aspect of capitalism, right? It's you have a major proportion of the population who has to work for a living. That doesn't necessarily exist in a pastoralist context. People do engage in labor, in work. They earn salaries, but it's because they fancy being able to buy their kids a set of toys or, new shoes or what have you. That is, I guess, becoming less and less true the more seriously some of these communities take their children's education. People do now need cash for certain things. It's produced this kind of interesting liminal zone where on the one hand you've got people engaging in the market economy but could comfortably not engage with it at the same time should they want to.
I'm curious, who are the types of people who are investing out in these frontier and pastoral markets when for much less hassle you could probably invest in the S&P 500? Or is it that there's actually massive gains to be had with investing in cobalt and nickel for electric cars? Or and maybe there's massive upsides in these markets. Like, are they like the GameStop and the Tesla stories in these types of markets? I'd love to hear who these people are investing in some of the big success stories that they've had.
I've already mentioned that obviously extractives, kind of exist everywhere. Equally, I guess as a source of food, cash crops. That there have for a very long time been international companies engaging with frontier markets, for kind of exports to Europe. So if you visit Cameroon, if you visit various parts of Africa, which I'm, I guess, most familiar with, there are coffee plantations, cocoa plantations. You see, European haulage trucks waiting to ship these off to Europe. So, I mean, that's maybe the more kind of traditional representation that international investment has in those spaces. But I think if we're talking about someone who decides, well, I want to go a step further, I want to go in and I want to invest in frontier markets, typically what you're looking at a lot of the time is impact investors. So looking outside of the traditional sort of sectors like mining, oil and gas, and kind of primary production, you tend to see, impact investment, which I guess has been around for, arguably since the colonial period in the case of kind of government-led bilateral impact investment. But it had a huge uptick in the kind of early 2000s, late 90s, where you suddenly started to see like private equity firms showing interest in various emerging parts of Africa and Asia. And the style of investment there, I think, is really, it's patient capital for the most part, because what you're trying to achieve is some sort of impact outcome. And whilst I think most of these, particularly private equity firms, will want to see a return within a kind of fund life cycle, the rate of that return is, I guess, it doesn't have to be quite as high as long as those impact outcomes are achieved, right? There has to be a return, but I think it's sort of sacrificed if necessary for the sake of achieving certain development outcomes. Outside of, I guess, the impact space, it's high risk, high reward. I'm not aware of many commercial investors that would sort of get involved outside of those traditional industries, but I guess it depends. If we're looking at the frontier markets list of, let's say, the S&P, their kind of ratings agency, or any of the others, the likes of Kenya has a growing fintech scene, for example, that I guess to some investors would represent potentially high reward. I think agri-tech is a particularly hot topic right now, because there's a lot of scope to sort of improve and make the agricultural sector more efficient.
For Alex and for myself to go invest tomorrow in, I don't know, cash crops or mining in, I don't know, in some frontier markets, I appreciate that it's not necessarily easy for us to do it. But what if I am one of the big international investors, along the lines of, one of the big mining companies or one of these companies that has an interest in starting a mine or, starting some sort of business in a country which lies at the frontier? How would they go about it? How would they start such a venture? And what role do you play in this?
I think one thing that we have to recognize about a lot of frontier markets, and again, I don't want to paint everyone with the same brush, but it's very important in those contexts to work with the government in some cases, particularly when it comes to mining, where you have to acquire licenses and concessions for exploration. If that's what you're doing, you end up having to work quite closely with political authorities. In a lot of frontier markets, the kind of social circles of the business and political elites are quite narrow, and so there's a fine line between them anyway. And so what that often means is walking this tightrope between getting things done, but not engaging with the relevant authorities in a way that might be perceived as bribery or corruption. So that's a key challenge, I think, operating in a lot of frontier markets is getting that buy-in from local authorities without taking it too far. Often I've seen that done by engaging with some kind of a local fixer. I think having local partners is absolutely essential. You can't just sort of waltz up and expect to be able to build a mine or build a cash crop export business. You are ultimately going to be doing this with local partners, and they're absolutely critical. But if what you intend to do is to also bring other investors with you who want to safeguard their money from accusations of corruption or poor labour practices in your sort of operations, then you have to be aware of the fact that sometimes the regulatory frameworks in these countries are quite weak. And so there's an expectation on you to adopt some set of independent standards that give your own financial backers, your own customers, assurances about the kind of responsible nature of your business practices.
I think this discussion actually leads us to a very interesting question, which is, if you're a London-based investor, you're sat around in London, you're reading the mainstream news here in the UK, it's very hard to know how much of what you read in the newspapers is actually relevant or in any ways close to the actual truth on the ground. So I guess my question is, how do you actually differentiate between political, social, environmental risks on the ground, and just market noise or just general misconceptions about these frontier markets?
I think speaking to people on the ground helps. I guess it depends really on what you want to know. I mean, if you are interested in how things are being perceived on the ground, and there's no replacement for actually being in market. And I think it's probably quite fundamental to, if you are someone that's interested in investing in frontier markets, there's no replacement for getting on the ground and arguably being situated there to begin with. That's not always possible when you're someone who's, let's say, like a pan-regional investor. You might have to base yourself somewhere. But being as close to the action as possible, I think, is crucial, because that's where you, I guess, get a sense of what overwhelming sentiments exist locally, and which you don't necessarily pick up from newspapers. I think our press in particular, when it does comment on, let's say, African affairs, entirely underestimates how much anti-Western sentiment exists on the ground in different parts of Africa. And we shouldn't be blind to it. I mean, when you look at the BRICS setup, for example, South Africa is a very comfortable partner in that relationship with Russia and China, as is obviously Brazil and India. And yet, I think there are still some quarters of the British press that like to think of South Africa as a sort of extension of Europe in Africa because of its history. But I mean, were there to ever be and it does look increasingly like the world is bifurcating around different, I guess people are starting to call it the emergence of a new multipolarity. There are huge swathes of Africa, I think, that would probably coalesce around the alternative pole, not one led by the West. Having said that, we're in a new era with Donald Trump, who is incredibly popular. I know on the continent of Africa, he has a lot of support. I'm less sure about other frontier markets. Don't ask me why, but I think it's in part to do with, some of these culture war issues, which it's been quite interesting engaging with people about those. The sort of debates that we have around LGBT and trans rights in the West gets picked up, in all different parts of the world. And often those parts of the world are quite against LGBT rights or recognition of trans people. And they use that as a kind of way to say, well, look, clearly the West is decadent. We shouldn't be engaging with these people. And they shouldn't be telling us what to do with our human rights because they don't even know what the two genders are. That's something that you hear quite a lot on the ground, right? But obviously, I think Trump is basically currently perceived as someone who will reverse that tide of decadence that seems to have consumed us all here in the West. That seems to be the perception on the ground, but I don't know. And I'm not saying I agree with that perception. But we're in an interesting period. Things might really shift over the next 5 years.
I was wondering, what are the success stories that you can point to from investing out there? If I was to play devil's advocate, you might be able to say that it's kind of colonialism in another form, where it's like enabled by capitalism, mainly extractive, not great for the people on the ground, fantastic for the other markets who are benefiting, like the cars and maybe Nestle. Are there actually win-win scenarios for both people on the ground and markets?
Yeah, I mean, I've yet to read it, but The Economist this week led with an article on the need for a capitalist revolution in Africa, which is interesting because I feel like they published something quite similar 5 years ago. I think it's a concept they recycle every 5 years or so when they've decided that there hasn't been enough capitalism yet in Africa. I guess, as I've mentioned, the kind of fintech scene in Kenya, which is, generally speaking, looking at kind of locally owned companies some of whom appear to be doing quite well. I mean, a lot of the stuff, when compared with the sort of tech scene in Silicon Valley, is obviously still incredibly nascent and often maybe appeals more to sort of local markets. But, there are plenty of examples, I guess, of homegrown industries springing up and doing well, even with kind of Western-backed financing. I'm not exactly sure of its origins, but I mean, when I was living in Kenya, I would often rely on a local e-commerce website, which is Jumia, which I believe is owned locally, but don't quote me on that.
One of the things that, as we speak, Trump's inauguration will be tomorrow. And one of the things that people expect will change is the focus on ESG. There is a concern that with a Trump administration, many of the considerations for sustainability will no longer be as important as they once were. How do you think this will change the way investing is done in frontier markets, particularly with regards to the fact that, as you mentioned, a lot of the investors in this space are sort of socially driven institutions. Do you think there will be a substantial change in how business is done?
Well, I don't think so. I think in many ways ESG and that whole space was due a reset. There are kind of two sides to the whole ESG trend, right? There's a kind of marketing of quote unquote sustainable tracker funds and other kinds of funds to sort of retail investors, which was in need of regulation of some kind. And I think whether or not we see the end of that side of ESG, I guess, depends on the market. I mean, I don't think Trump necessarily will have a say on whether a market for those kinds of financial products does or doesn't exist. The other component of ESG, I guess, is it as a form of risk management. I think when it comes to frontier markets in particular, there are reputational risks associated with, for example, not enforcing some kind of labor protections when it comes to the workforce of whatever company you've invested in, right? There are also there's increasingly the risk of actually being taken to court, where companies in, let's say, I don't know, Mozambique commit environmental violations. There was recently a mining company that got taken to court in England for something it had done, I think in Zambia or somewhere on the African continent. So there are all kinds of good reasons for investors to continue with some form of what you might call ESG or environmental and social risk management. Though I think there's probably an opportunity with Trump coming in for that conversation to kind of really dig deep into what is material, and what actually has the kinds of outcomes that we would like to see, rather than just box ticking exercises that are there to facilitate.
So how much of
initiatives.
the way things work now, or have worked in the recent past, how much of that has been a box ticking exercise, and how much of it has been a genuine concern for how to operate?
Well, let me put it this way. I mean, I think there have been a lot of the whole kind of like responsible investing and the ESG spaces hasn't been around that long, and there's been a lot of noise, a lot of various acronym soups, and it's about time that some of that was consolidated. I mean, there's a dizzying array of sort of regulations around right now as well that differ from jurisdiction to jurisdiction, which are a massive cost and headache for businesses worldwide. Having said that, I mean, I see these as like positive steps in the right direction towards, more responsible business practices, where those have often been treated as kind of externalities within financial models and so on. But it's definitely true that, lazy approaches to this kind of stuff exist, and box ticking exercises and different forms of greenwashing are certainly around. Mm-hmm. They've been exposed in the media. There have been all kinds of stories around this stuff. And my worry is sometimes that it kind of undermines faith in the entire project, rather than being seen as a way for us to actually improve how we do these things. Having said that, I mean, I've sat in when I was a consultant. I mean, to give you an example, when we were allowed to engage with Russian companies, I remember being asked on behalf of an investor to ask a Russian gold mining company situated in Siberia a bunch of questions about its gender diversity initiatives, which struck me as being a bit odd. I would have thought that we should try and reduce having to send anyone to Siberian gold mines as much as possible. I'm not sure there are many women who'd be happy to see themselves more represented in that context. I don't know. Maybe I'm wrong. I suppose as long as the opportunity is there for them, that's what's important. But yeah, look, definitely there's a lot of noise. And I do hope that, if anything, if there's any positive outcome from Trump in the White House, it's that we consolidate around things that make sense and achieve outcomes in the real world.
That's a hope, I guess. Sipke, we're running slowly short on time. I have one last question for you. What do you think is the biggest misconception about investing in frontier markets, particularly in Africa, that you see out there?
The biggest misconception? Do you know what? I guess the fact that nobody really sees it as an option at all. There are huge opportunities to achieve positive outcomes and make returns when it comes to frontier markets, but they're often ignored. And they're often ignored even when big sort of multilateral institutions come in and offer all kinds of concessional financing. It's a huge challenge at the moment within the development finance sector to try and mobilize commercial capital into things like renewable energy on the continent because of this perception of risk, I suppose. And that's the real challenge going forward. Ultimately, the level of investment that we need, if you're both looking at this from a sort of decarbonization point of view, the level of investment needed for the world to achieve net zero runs in the hundreds of billions, if not trillions. And equally, to meet the sustainable development goals, there's an enormous financing gap. I couldn't give you a figure for it, but that gap needs to be closed by the commercial sector. It can't happen through bilateral aid alone. There just isn't enough money in Western governments to achieve some of those objectives. And so I think the big misconception that, I hope gets corrected one day is the sense that there's no opportunity there, or that the risk is too high, or that there's no kind of concessionality available to people who are willing to take the plunge.
All right. Sipke, thank you very much for joining us. This has been a great conversation. Thanks a lot.
Thank you for having me. And take care.